All right, so good morning and welcome to the fourth session of our Small Credit Union webinar series. We appreciate your participation today and we hope you've been enjoying these series. Today we will have Dolphin Debit, CU Cards, and Amazon. So Amazon will start things off today. I'm sure everyone knows and uses Amazon in some capacity. And Bailey is here to tell us all about how you can do it for your credit union. Bailey is a customer advisor on the credit union team for Amazon Business. Bailey has been working with credit unions to create a tailored solution to your specific challenges for the past 2 years. So welcome, Bailey.
Christine. Hello, everyone. How's everyone's week?
Great.
Good. Okay, I'll get started here. I'm going to share my screen. Are we waiting for anyone or should I just go ahead and get started?
You could keep going because what we do is we record it so that if people miss the beginning or middle or end, they'll have the recording.
Perfect. That sounds great. Can everyone see my screen?
Yes.
Wonderful. So as Christine said, hello everyone, my name is Bailey Moylan. I have been with Amazon for 2 years now. I've always worked with credit unions, but about 6 months ago, I joined a team that was dedicated specifically to working with credit unions. So no more banks, no more insurance companies. I really get to focus in on what credit unions' challenges are and how we can support them at Amazon Business. Today, I will walk through what Amazon Business is. I will walk through our partnership with CUNA Strategic Services that talks through how we can specifically support small credit unions and the different benefits that you get through that. And then we'll move on to questions, maybe if we have time. So to start off, what is Amazon Business? Amazon Business, I'm sure you all, I'm going to keep this slide so you don't read everything because I'll go through that. I'm sure you all use Amazon.com in your personal lives. What we did about 8 years ago was we created Amazon Business, which sits right on top of Amazon.com. And it was created for 2 reasons. Number one, to give employees an easy way to find the best priced items for work, but also number 2, to give leadership like yourselves some more control and visibility over what's being purchased. What we see in a lot of credit unions is people, honestly, a lot of businesses is employees need something and they'll go to their personal Amazon.com account and they'll buy what they think they need and then they'll expense it with a corporate card. We wanted to make it a little bit easier for leadership to get more visibility into what's being purchased outside of like contracted spend. So Amazon Business is just like Amazon.com, but we have business only pricing and we have, we're not going to push like hair blow dryers or makeup or different things to your employees. It's going to be office supplies, janitorial, break room supplies that are pushed. You can still technically get anything that you can get at Amazon.com on Amazon Business. It'll just have to be a more targeted search. But I do have a lot of credit unions that will still utilize Amazon Business for like, employee gifting or, parties or office parties, different things like that. So it's still nice to know that you can get different things, not just office supplies and janitorial things. I'll move over here. Our credit unions are utilizing Amazon Business for 4 different types of spend. I have some credit unions who utilize us for only one specific area and some who utilize us for all 4. The first one is tail spend. This would be, I would say, for larger credit unions who have corporate cards and people don't have full visibility into what's being purchased. They're wanting to stop people from going out to Target or Walgreens and just putting it on their card and then expensing it later because we know that takes time. It's hard to also have full visibility into what people are buying out there. Bulk spend. So this is more for IT products. If you're opening a new branch, we have the ability to create custom quotes. So if you need to buy 100 monitors, we have the ability for you to negotiate with our suppliers on what price you pay per monitor. Manage spend. So this has been a really big one for smaller credit unions, finding new ways to save and having one supplier for all of your different needs. And then lastly, responsible purchasing. We have made it really easy for credit unions to find sustainable and local sellers throughout the marketplace for the best price. We know how important it is for credit unions to support their members and their local community. And so we've created a way, I'll go through that a little bit, to be able to support local through our marketplace. This, I would say, shows how many products we have on the marketplace. We have over millions and millions of products for office supplies, break room, MRO, janitorial. This just is a really good way to see that we have like hundreds of thousands of sellers that all compete for the lowest price. So we're able to find some pretty good pricing on Amazon Business for these different areas. I'm gonna just highlight two of these for smaller credit unions. Number one is business only prices. I don't know how often you guys are currently purchasing on your personal Amazon.com account, but it's going to be 6 to 10% cheaper on Amazon Business, just due to the fact that we're giving business only pricing. The second one I want to highlight is saving time. So what I see with a lot of smaller credit unions that I work with is maybe like the CFO is purchasing everything for employees, or a purchasing manager is. And the CFO is taking time to listen to what the employees need, go onto Amazon, get what they need, and then purchase it and send it. Our Amazon Business account gives employees the authority with approval workflows to go onto Amazon Business, put what they think they need in the cart, and then it would be routed to approval for the CFO or a leader to approve before it's actually sent for shipping and paid for. So I've seen a lot of CFOs say that this has saved them so much time. Rather than shopping on the Amazon Marketplace, their employees can go do that and then they can approve what is needed. Now we'll talk about the specific value for credit unions. I talked a lot about Amazon Business and what we do, but I do want to talk through our partnership with CUNA Strategic Services. For those of you who don't know CSS, they are over all credit unions in the United States, and they partner with different suppliers to get different discounts and benefits for credit unions specifically. Our partnership with CUNA basically states that we're a preferred supplier for credit unions around the country, and there are some different benefits that you all will get through this. Here are the benefits. The biggest one is you do get a 50% discount on your annual Prime membership. One thing I didn't mention at the beginning was Amazon Business is free to use. You can go ahead and set up all of your employees on there and it's free. You'll just have to pay for shipping. So very similar to Amazon.com. When you get Prime, you get free 2-day shipping. That's the same thing for the business as well, but you only need one Prime membership for the entire business account. You guys are eligible for 10%. I've seen it go all the way up to 40% off all of our Amazon private label brands through the partnership with CUNA. That's going to be our Amazon Basics branded items. Similar to Costco having Kirkland, we have our own brand that you guys will get additional discounts on. Similar to this, it's not on this screen right now because we just got it approved last week. If we want to take a look at the name brand office supplies, your Scotch tape, your Sharpie markers, we just got approval where we put a price ceiling on over 700 office supply items. And what we're seeing across that is about a 30% savings. When I follow up, I'll send the list of items, but we've got things like chamomile paper, HP, toner, different things like that. So great discounts on there as well. I couldn't believe that they that we got approval for price ceilings. We've never seen that before, so it's great. You do have the ability to create reorder and shopping lists to share with your employees. So if there are specific items that your employees should be buying, you can create a list, and that's the list that the employee should purchase from. You also have pre-approval for a pay by invoice credit line of $5,000. If you choose to not go the corporate card route, you can utilize our net terms. And then lastly, we do have a complimentary product basket analysis. I'll explain that right now. It's a parity and pricing comparison. I've done, I think, 70 this year with all different types of credit unions, small to large. And basically what this analysis does is we take what you're currently purchasing from your current office supplier, janitorial supplier, and my team goes onto Amazon Business, and we show you what those exact items and similar items would cost on Amazon Business. So the analysis is great because it shows you, okay, you could save $40,000, let's just say, or $5,000 by switching over to Amazon Business. But then it also shows you the line by line items, like this printer is 30% cheaper on Amazon Business. So it's a lot of great data, and I think it's a really good gut check to make sure that you're getting good pricing from your current supplier. Moving forward to the credit union account structure example. So this is the way that my credit unions typically set up their account. In this big blue bubble here, this is the root level of the account where you have access to all approval workflows, addresses, different things like that. And this is typically where my C-level sits, or accounting or purchasing. Then we'll have different groups inside of the Amazon Business account for your different departments and branch locations. There's two really great reasons why we do this. The first is for visibility, so that at the end of the year, it doesn't just say Publix employees Federal Credit Union spent $30,000 on Amazon Business this year. It dives deeper into, okay, HR spent $5,000 of that. This branch location spent $2,000 of that. And you can really dive deep to see where departments and branch locations are spending and how much, especially for budgeting within the next year. The other great reason for the groups is because we know that different departments and branch locations have different approval workflows. So let's say IT doesn't need approval unless something is over $500. We can set that approval workflow up within that group. And then let's say the branches, they need approval on any item that they purchase. So anything over $0 needs to go to this specific person for approval. You can really customize it to how it works for your internal process at the credit union. I talked a little bit about this, the account structure, approval workflows, payment management. You can decide if you want people to use corporate cards or if you want everyone to be on invoicing. And then I talked a little bit about guided buying here. Guided buying is great. A lot of credit unions really like this, especially with the discounts that you get through the CUNA program. So what we typically do is we prefer all items that are Amazon Basics or within that list of price ceilings, so that when an employee goes to search for something, those items are going to come to the top of the search and say, this is the item that your leadership wants you to buy, so that they know that you're getting the best discounts and the best pricing. So you have more control over what your employees can buy within the marketplace. Next is spend visibility. You get really good analytics into what people are buying, what categories a certain branch is purchasing, how much in that category. We use our data from AWS to be able to give you some super in-depth data, which helps guide budgeting for the next year, which helps you understand where we need to, cut some costs. It's really some great data. And then buy from local businesses. I mentioned this at the beginning, and it's similar to how you can guide your employees to a certain product that you want them to buy because of the discounts. But this would be, there's a local seller in your area that is selling on Amazon Marketplace. If someone is typing in a stapler and there's a local seller, we're going to bring that to the top because we want to be able to support local through the marketplace. And we also give you some really great reporting that you can then utilize to report out about how much you've spent with local sellers throughout the year. Same thing with sustainability. A lot of my customers are looking to support sustainable sellers. And so we can do the same type of thing with local sellers as sustainable. Lastly, I'm going to send this deck out, but if any of you already have an Amazon business account, you can utilize this link and this code to start getting all of the discounts. If you do not have an Amazon business account, you can create a free one and then use this link and code to make sure that you guys, all of your employees are getting the discounts.
Thank you, Bailey.
That's all I had.
Does anyone have any questions for Bailey? I know, Bailey, I've said this to you before. It's so nice to have the information that that Amazon can produce saying how much I have spent locally, because that's one of the things that we like to talk about is, oh, I spent X amount of money locally with providers who provided like staplers or toner or anything like that. That's a nice feature.
Yeah, it's really great. I'm glad Amazon, because it's not just going to the big bad Amazon. We're able to support local through.
Yes. And then I thank you for giving them a discount. We'll make sure we'll get the codes out to them so that they have it, so that they can take advantage of the discounts that CUNA Strategic Services and Amazon Business provide.
Perfect. And the last thing is, part of my role is to help you set up your account. So if any of you want to contact me directly, I'm happy to understand how purchasing works at your credit union and help you set it up to the best way that fits your needs.
Great. Well, thank you.
Thank you.
I appreciate your time.
Thank you, Bailey.
All right. So next we have me, Christine. So I gotta come here and share my screen. Okay. So as you guys know, you guys can see this, correct?
Yes, we can.
Okay, thanks. So my name is Christine, and I work at the Association of Vermont Credit Unions, which, like many other associations, at times they create one-of-a-kind programs to help their credit unions grow. Ours is the Q Card Services, and it is also powered by PSCU. Today, I will be talking about how to enhance your debit and credit card program and what to look for when seeking out a new credit card program. So, challenges that are faced by small credit unions. At times you have limited resources. Small credit unions, the CEO is wearing multiple hats, and you also have financial resources dedicated to demanding needs of the teller line, and it's very limited. So you don't have the ability sometimes to have someone just dedicated to a debit and credit card program. Also, you can be dealing with technology constraints. Outdated and limited technology infrastructure can actually make it difficult to provide modern card features such as mobile payments, EMV chip, and other real-time transactions. Cost considerations. I'm sure when I said the word PSCU, your first thoughts were, it's super expensive. But, working with different associations, sometimes you can find a debit and credit card program that actually will fit your budget. Compliance and security. It can be difficult having somebody set aside for just dealing with compliance and security. So it's important to find a program for your debit and credit card program that will also help and make sure that you are in compliance. Member expectations. This is one of the important ones, because you as a small credit union, you want your members are entitled to have the same level of features and conveniences as those provided by the larger credit unions, because if they're not getting what they need and to meet their expectations, they're going to be going to another financial institution, and you want to keep them there. Implementation hurdles. It can be difficult and time consuming to implement a new card program And so that's why a lot of credit unions just stick with the same program over and over again, because they don't have the time or the resources dedicated to help make the change. And so it's important that you, when you do look for a new card program, you see if there is a company that will actually do the implementation for you. Fraud prevention, that is huge. That is very big these days. Everyone is trying to get into how can I come up with the next fraud and really hurt our members. And so you want to make sure your card program is really protected, because you want to make sure you are not doing any reputational damage to your card program. And so what solutions can there be? Some of the solutions, you want to make sure you have a card provider that works with you. You don't want to be with a company who actually, calls you up 6 months before your contract is about to expire and say, hey, how's it going? You want someone that is there for you from the beginning, working with you on doing your conversion all the way through to, any issues with your members or training issues or anything like that. You want to have somebody with you. Modern fraud detection and prevention. You want to make sure the system enables safe and secure customer spending. Advanced analytic technology, with all the talk about artificial intelligence lately, having an analytics that can learn your members' habits will help prevent fraud. You want to make sure the program that you're looking at potentially has some loyalty programs. And a lot of people are saying now, what is in it for me when they're looking at a credit card program? And having these solutions for your members is important to make sure that you're keeping up with the Cities, the Chases, or the larger credit unions. You want to also make sure you have a in-depth portfolio consultant. You want to make sure that somebody is looking at your portfolio all the time, so that like it goes hand in hand with working with you. You want to make sure that they are keeping an eye on your portfolio to making sure that you grow and that you're not staying stagnant. And so when you consider all of this and you're thinking about ways to improve your card program, what factors influence a member's level of satisfaction with their financial institution's experience? And the one thing that I can think of is the frictionless payment journey. You want to make sure that you have rules and strategy so that your member banks with confidence and prevents losses with contextual cardholders engagement. So I know some people may have already heard this story, but my credit union that I bank with actually uses PSCU. My uncle died a few years ago, and I was heading to Connecticut to go to his funeral, and I had worked in the morning, and I drove down late in the afternoon. I was tired when I got there. I was, sad. The whole entire weekend was going to be very draining on me. And as I walked through my aunt's door, I had a text message from PSCU saying that someone was trying to get a computer from the Home Shopping Network. And so I was like, what is going on? I was so confused. As you know, many members are like, what's going on? I don't understand. And so I quickly went to my online banking. I saw that the transaction didn't happen, and I immediately hot carded my card on the system so that nobody could do any transactions until I came back to Vermont and actually had my brain into it and thought about what was going on. And come to find out, someone had gotten a hold of my card. They did try to get a computer, but because PSCU made sure that the fraud didn't happen, I didn't lose any money, my credit union didn't lose any money, and the Home Shopping Network didn't lose any money. So it is, real important to make sure that you have the ability to stop the fraud fulfillment and provide rapid repayment. You should always create a customized approach and consult with a risk management expert. So like if you should go to your provider, and if it is really tight for, making sure that the fraud is stopped, you may want to look at loosen up a little bit, because you don't want your members to go to a store and then get stopped with the transaction because they think it's fraud when it's really them and they have the card in their hand. So you have to make sure you do a nice balancing, because we want to make sure that with fraud being a hot topic, we must stay ahead of it. I do have to tell you that last year, PSCU stopped over $52 million in fraud. And that would have been lost. If you think about it, it would have hurt the experience with the member. It would have hurt your reputation with the credit union. And then you would, you just want to make sure that it is a frictionless payment journey for your member. And now I'm going to talk about ways to actually try to grow your credit and debit card program. With the holidays coming up, you want to look at doing some campaigns. Credit and debit card campaigns are intended to attract and engage members, increase card usage, and highlight specific card features and benefits. So consider your target audience. So if you're looking at a report that says, these are the people that are not using my credit card program at all, maybe you send them a rate promotion and do a 12-month $199 balance transfer, or look at credit lines. You may have some members who have been loyal members to you for years and they have a low credit line. You can grab that report. The goal is to develop compelling incentives that will appeal to the cardholders and encourage them to take the desired actions. So if you're doing rewards, cashback reward campaign is important, a welcome bonus campaign, birthday bonuses. And then when you do these campaigns, you can do them through Facebook, Instagram, promote them around your branch, putting them on your online. But looking at all of these types of campaigns are important, because that's going to be the way to grow your either debit or credit card. I personally like the debit card swipe campaign. I know when I go shopping or anything and I use my debit card, I usually swipe and enter, because I don't like putting my PIN number in, because sometimes I just, number one, I like giving my financial institution a little bit more revenue on the exchange, but also I think it's a lot more safe to just swipe and enter. And so when you are looking to do a campaign, what you'll want to do is make sure you have some reports. So if you do not have access to reports with your current provider, you could ask them to give you a couple of reports to monitor and analyze your credit union members' usage. Like gross active accounts, you may want to also get people that are inactive. The comparison with industry, you want to make sure to see your debit and credit card program is growing at the same rate as the industry is. Merchant category, where are people spending the money? Your provider should be able to get a deep down report to you, or you may have it at your hands, so that you can grow the program with the reports and with the campaigns that you would be doing. And I'm sure that you have, if you reach out to Dean, he will probably have somebody that he could send you off to for doing a marketing campaign for you. And so you want to ensure that you have a card program that meets your financial needs while also providing the cutting edge fraud prevention, members' expectation, and resources for your credit union. You should look for a tailored program that can be customized to ensure that you only pay for the items you need. Your back office operations will be more efficient when you use cutting edge technology, allowing you to spend more time engaging with your membership. And so that's it. I thank you for your time. If you have any questions, let me know. If anybody wants to look at Q card services, you can email me and I will reach back out to you.
So I have a question for you, Christine. Do you have size limits for how big or how small the credit unions need to be to fit within your program parameters, or?
We do. It's for small to medium sized credit unions.
Okay. And when you say small as they want to be.
Yep. We have a very tiny credit union on our card program. So, and it fits their budget. It's important, to get this technology, at least I feel, so that you're keeping up with the larger credit unions or the larger banks, because you want to capture the younger generation and you want to make sure that these programs grow with you. And we try to work with the credit unions to help them grow as well, their portfolio.
Thank you very much for that information. And just to go back to something that you had mentioned, if people are looking for some marketing assistance, just a reminder that we had Synergent present last week some of their marketing solutions, and they have been a great partner to a lot of the small credit unions over the years. So please keep them in mind. So thank you very much, Christine. Our next speaker is going to be Paul Gandolfi from Dolphin Debit. And Paul is the Vice President of Sales for the Northeast Territory and the Branded Sales Director for Dolphin Debit Access, which is a subsidiary of Euronet Worldwide. And they are a full-service ATM, ITM management company that owns and operates ATMs and ITMs for credit unions. Paul has spent the last 2 decades working within the fintech financial services space. He was one of the first employees at Dolphin, joining Gay Walston and Ben Allen on their drive to build a true pure play ATM outsourcing company when this was a brand new concept to anyone and unheard of. So he was instrumental in Dolphin's double-digit growth over year, has worn many hats over his tenure, which we can all relate to, being in the credit union industry. Paul holds a Bachelor's of Business Administration in Strategic Management from the University of North Texas. He lives in Allen, Texas, which is a suburb of Dallas, with his wife and son. Welcome, Paul.
Well, thank you. I'm also a Leo, since it seems to have everything else in that bio. I guess that had to come from Joe in marketing, didn't it?
It did. He did not put in there that you have long walks on the coast. So
I was about to say it did cover a lot of bases. Yeah, thank you. Thanks so much, Dean. So what I am going to cover today, and I'm going to share my screen here in just a minute, is we are obviously an ATM outsourcing company, and that encompasses so many different things. And there is a path nowadays from ATMs to ITMs. And I realize that may not be for everybody that may be on this particular webinar. However, the ITM technology is very proliferant in today's market, and it does make it seem like, oh, it's just everywhere, and everybody should take a jump at it and take a look at it at least. So what I'm going to try to do is provide a little bit of a top-down look at it. And this is an excerpt from a presentation that I'm going to be giving for Dean at an upcoming trade show, a much longer presentation with a little more detail. But I'm hoping to kind of give some insight into, if you perhaps are looking at that path, these are a lot of the things you need to consider before going into it. Now, I am in sales, so I'm not trying to dissuade anybody from looking at it, but it is something that requires strategy. It is not something to just look at like perhaps as buying another ATM. It is something that requires a good deal of consideration. So let me go ahead and get my screen shared here, and hopefully I don't have any technology goof ups. Hopefully everybody can see that. Are we good, Dean?
You
We
are
can
good.
see it.
Oh, fantastic. That by far is the best looking part of the excerpts of this little presentation. I see, we had Amazon and everybody on, but I'm a little more verbal in what I do. Obviously, I'm in sales. I could literally be on here and speak for an hour without probably taking a breath, but that is what I do. Okay. When we are looking at possibly considering ITMs as something that may be a part of the future of your credit union, the why is oh so important. Great reasons to even look at perhaps making the jump. Staffing. Staffing is so very difficult nowadays. I don't know how people are making it. I live in Texas, and please don't hold that against me. I don't know what people are doing for a living. It's hard to find people that are really willing to work. So I know we are experiencing staffing issues down here all over the places. So I just feel like if you're having staffing shortages, sometimes ITM can help with that. If you want to extend your services and hours beyond those normally for what your branches could open. The dropping the per transaction cost feature of possibly using an ITM is a big piece that is a draw when people read the data. Now, the piece of the data that people normally attribute that to is that a normal teller transaction, depending on which metrics and data you read, is a little over $4 per transaction, give or take, on the national average. A ITM transaction is a little under $1. Some people, when you look at some data, it can be about 72 cents or so, but that also depends on the volume and how many you have, and et cetera, et cetera. But there are a lot of pieces of information that hinge to that dropping the transaction cost. And I will try to go over some of that with you. Growing your footprint into areas that you may not be in. As a smaller institution, when you decide you want to go into an area to extend your membership, brick and mortar is very expensive nowadays. The mini branch concept has been around for a very, very long time. Now, ITMs have given it a bit of new life in the sense that you can possibly put an ITM that delivers a tremendous amount of services into a very, very small footprint with, say, a concierge person there too that can handle possibly some teller type functions, possibly simply just a loan officer and a concierge person, and then an ITM to do normal bank functions that would have video teller capability. So that is a good, strong reason if you are looking to have a growth strategy into areas to extend membership and brick and mortar is going to be too expensive. That's a piece that is important. That's a good reason. If the growth pattern for your credit union is looking at self-service technology as the future path, as a whole, as the 10-year plan, starting to invest in it makes sense. And ITMs as a piece of that is a good reason. But that is a cog in a wheel of an overall technology strategy that has been laid out, of course, by the executive team and the board for growth. So it can be a very strong part of that to help the credit union find its way forward in an ever-changing market. I have here, it looks kind of funny, the not so strong reasons, but as an ATM management company, and we sell and manage lots of ITMs for all different sizes of institutions. There are a lot of people that would like to jump into it because they see a lot of their, competitors in a local market that are doing it. That is a poor reason for doing it. Everybody in every institution is different. What works for one institution may not work for you fiscally. It may not work for your membership type. I mean, let's keep in mind that the membership really, has to accommodate the technology and has to grow with it and accept it as well. Trying it out, and I will touch on this a little later. Financially, it's hard to try it out. So if you're thinking of dipping your toe in the water, my father's always told me that there's no way you're ever going to get wet by dipping your toe in the water. And you tend to rule out the ability to experience the impact of the benefits by trying to jump into the technology pool of ITMs by just trying it out. The desire to stay current is not enough of a reason to want to go ahead and make the financial jump or the technology jump to get into something like ITMs. You need to make sure that it really fits the path of what it is that you're doing, because it will be a strain, possibly financially, and it could be a strain on the learning curve of the staff. It could be a strain on the membership. So it's you really have to evaluate it. It really can't be the idea of, well, we want to make sure that we're progressive. Determine if you are progressive or not. Determine if that really fits the model of what it is that you're doing. There's nothing wrong with being steady. So these are determining the why is the very first step on trying to decide if now is the time, or if this is even a path that you want to take. There are two paths to take when you are looking at possibly moving from ATMs to ITMs. And I do keep saying possibly because I'm trying to make sure that nobody that's watching this is thinking that I'm trying to sell anybody that, hey, everybody needs to go to ITMs. That's not what I'm putting forth here. What I'm trying to put forth is the information of what it is to make that walk. The two main manufacturers that are really dominating the industry currently regarding ITM technology are Hyosung and NCR. And they have two very distinct paths that they are moving down. Hyosung really looks and performs and puts forth the self-service with core integration. It really is an ATM that becomes a self-service kiosk that is integrated with your core to provide a more enhanced transaction set that most transactions can really be done by the member on their own. They consider this to be an enabling technology. What they are looking to do is to, in their sales pitch, is to free up tellers to do other things for the credit union, other selling of services, and engaging in deeper conversations and in deeper relationships with members in other ways, so that the actual ITM itself is performing what they consider to be more routine teller line type tasks. And that is, all the standard things that what we consider a full function ATM would do, which would be cash withdrawals, cash deposits, check deposits, and then of course the balance inquiries, and then enhanced functions that come with being integrated into the core, such as, transfers between accounts, loan payments, which is something that of course ATMs can't do. Different denominations that you're pulling for when you're doing withdrawals. There's just a whole host of other things that it can do. And they look at it as the ITM itself as being a bridge between what your mobile app or your computer online software does with the member, and, for instance, being in line with the teller. That is the concept. Now, at the same time, there is also a button on the screen that allows you to get teller assistance as needed. So you still can have that face-to-face interaction with the teller, which is great. You can still, honestly, you can see what you've got going on there. They can help with any other assistance that may be needed. They can, the customer can hit that button if they want. If they don't want to do anything self-service, they can jump in there and talk to a teller right away. But the software and the core integration lets the member perhaps do a ton of the other transactions themselves if they so choose. And this, Hyosung feels, is the leaning towards the future of self-service technology, thus freeing up the human resource element to do other things. Now, NCR, who was really first to the market, they view it in a slightly different way. It is standard ATM transactions, just like what Hyosung is doing too, where they can do cash withdrawals and cash deposits and check deposits and all of that kind of good stuff. But almost all the other transactions, you hit the button and you get an interactive relation with the face-to-face with a teller. And there are benefits to that too. Therefore, they are really replicating what the teller line experience is. You get more engagement. You know, their sell or their marketing is that you are still getting the engagement, face-to-face relation with a teller on virtually every transaction. This allowing the tellers to cross-sell a little bit, you know, with every member that comes through, and providing, you know, more meaningful engagement on most transactions. It is not self-service mostly in any way. It is really more, as I mentioned before, trying to replicate that branch experience. And it has benefits as well as the self-service version has benefits. And both of them, it just depends on the strategy that you're looking for as you move forward, if you choose to go down the path of ITMs. And they are both viable and they are both successful. So, but they are different and they require different setup and they require slightly different hardware and different strategy on how to get things going and set up. This is really the crux of it all, as we are all, let's face it, we're in finance, we're in the credit union, and I'm in fintech. We're in the finance business. You have to make a business case in order to do that. Or as I like to say, the money is the money is the money. Having a teller strategy is very important for either path that you may choose if you're looking at a solution like this. They call it a teller migration strategy, which is regardless of how you may want to do it, either core integration or just with interactive video teller, you'll need to look at possibly doing some kind of centralized, you know, remote teller experience. And you need to do that in order to be able to get the impact of multiples. With the NCR solution, the standard or the metric that is used is that one remote teller can be operational or responsible for 3 to 4 ITM machines. That number can vary depending on who is perhaps selling it or whatnot, but let's just say that that really kind of is the standard. One person at a desktop can really be the teller for 3 to 4 machines. The Hyosung solution, they proffer up that a single desktop teller can be responsible for far more ITM machines because most of the transactions are self-service. I've heard it said it go as high as 10. This is just my personal opinion. I feel like that might be pushy, but at the same time, there is a difference in the outlay of cash to get things rolling at the setup. So you have to consider the teller strategy, because centralizing the tellers reduces the human resource element so that you can then invest that money into the technology. If you will not get the impact of reducing the cost per transaction without having the human resource element slightly exchanged. We do, and this is not suggesting that we need to let people go in order to find that reduction or that impact in the in reducing the cost per transaction. But common sense will tell you that if you're going to invest a good amount of money in technology, you can't have both things operating, existing in the same space and save that kind of money. The hardware expense, the machines are going to be more expensive. You're looking at $60,000 to $80,000 a machine. So when you start to rack that up, you get another $30,000 to $80,000 in software. And then depending on the professional services that you may use for core integration or for video setup, you could easily go to another $150,000 on top of that. Now, going back to my dipping the toe in and trying it out. When you start to amortize those expenses, if you start to lump the startup expense and the software expense, which on the norm is good for up to 10 machines on the software and the professional services expense, you are greatly reducing your opportunity to get the impact of reducing the cost per transaction. It just makes sense, right? If you have one machine and you put all that expense of setting it up onto one, when it could be distributed onto multiples, how can you get that cost per transaction down to where you can realize it, to where from the business case, it really makes sense? And so what we find, and when we consult with clients, especially small to mid-sized credit unions, to make the business case, you really need to put in 4 to 6 ITMs. And that means that you really are going to spend $500,000 to $800,000 to get in, to try it, to see if you can get the impact that you're looking for. So that lets you know that you really need to flesh out the strategy. You have to be all in to see the impact, to make it a worthwhile venture. That is one of the pieces of moving from ATMs to ITMs that is still currently difficult in the market, is that the buy-in is still quite expensive. And if you try to just look at one of them, it really becomes more of a novelty, and it won't be adopted as quickly because you still have to have all the other elements of just having, your regular teller lines and everything. And you don't push people to adopt it because you will still have everything else available in a normal vein. You won't have enough of them proliferated through for people to look at it. It won't be perceived as something that you are doing as a strategy, and you also won't be able to amortize the cost out further so that you can see the impact of the cost of transaction. So that is the rundown, and there's a lot more detail to that, and it's probably already too much detail, but those are just some of the things that you have to look at if you're thinking of possibly walking the path from ATMs to ITMs. Those are some of the things that you need to look at. And does anybody have any questions?
So do you have a lot of people, Paul, transferring from ATMs to ITMs?
We do. We do. We have, did my screen stop sharing? I guess it did.
Yes.
Yeah, we have a lot of people, and it's strange. And the reason why I think that, I know it may not seem that it applies to smaller credit unions, that we get clients come to us from just everything from maybe 7 to 10 million up. All now, I will say that the people that make the leap are mid to larger credit unions, because they're putting it in, and usually the biggest reasons are either the self-service strategy for the future, or honestly going with the mini branch and concierge piece of it moving forward is the driving force, trying to move into different areas and not doing a full brick and mortar strategy.
Yeah, it seems like that's what a lot of people are definitely doing, is not having so many brick and mortars.
Well, people, it's tough. The human resources, let's face it, I say human resources, I'm trying to paint it. People are expensive, and benefits and everything being what they are, it really ramps it up. Now, of course, people are a business, and that's the important piece of it. But if you can use the technology as a tool to complement what the people do, I think it's a good combination.
Thank you.
You're more than welcome.
Hey,
You're welcome.
Paul, I appreciate your presentation today. I just had a few questions. Obviously, there's a small credit union group, as you mentioned, and most of us wouldn't have that break-even number, that 4 to 6, that we need. It may be a case to be made for a micro or mini branch, which could cost justify without needing that many. I just got off a CUNA conference, actually a few days ago, and there was some large credit unions there. It was a $1.3 billion credit union out in the West Coast, and he's working with Hyosung
Mhm.
to have an avatar, just like an artificial intelligence type of avatar to kind of bypass the need for even his call center or remote employees. Do you see something like that coming down to the smaller credit union level at any point?
I do. I've been out to the customer service center out there. I'm in Dallas, so they have Hyosung has their customer service center out here, and I do. As a matter of fact, I think that once they trial run it, that software, and of course it's AI generated, is what they're doing with it. I think once they're going to roll it out at some of the larger institutions first. That's where the R&D is going. But my understanding is that package is to further come down to create what they call not an artificial. They have a better word for it, and it's escaping me right now. A virtual call center,
Okay.
and it still could be a couple of years down the road, but that will in turn really change the surface of what we're looking at regarding having to develop that teller migration strategy. Because, the machines, any ATM that does deposits and things like that, they all act just on the business policy rules that you set that are set for your tellers. The machine is just an extension of what your teller does. It's, list these checks as exceptions if someone tries to deposit it. The ITMs are no different. And so it goes and stands to reason that the framework and the rules that would be set up for the AI virtual tellers can be developed in the construct that you would set. That would be the same business policy rules that you would lead your tellers to perform at. It is crazy, and I agree that it's AI scares the daylights out of me as with anybody else, but it does make some sense that could work as well. And that's just software that would then, come down. Rumor is that Hyosung is going to host it as well.
Yeah, it's definitely interesting, and hopefully it will come down, and we'll all be able to look at that. On kind of a related note, I know you're not in a position to probably certainly give an answer on something like this, but you know how we have models out there like the CUSO co-op shared branch that some of us belong to, my credit union belongs to it, and it's kind of been a lifesaver for us, like during COVID as disaster recovery and that type of thing. I wonder if there's a possibility of at least small credit unions that say have a similar core, a similar platform, to be able to not need to have 4 to 6 as long as they have the same core. And it's really up to, that's probably a core question, but I know you're in touch with what's going on.
Yeah, I think that can be done. We do shared networks regarding ATMs, as it is, and shared branching exists for deposits. So I would think that could be done. In other words, if you collected a reciprocity agreement, you collected 5 or 6 smaller credit unions,
Right.
and then you branded them all the same, and you collectively went in, and then you did the deposits and everything. That is a software issue. And before I don't want to get out of my technological depth, obviously, but I do think that could be something that can be done, especially if you shared the same core.
So if
Not
we
shared
have,
core, the same model core.
yeah,
We
I
do
understand.
that in Vermont. We have a network that we create up here, a model called the Falcon Network. And everybody, we even have some banks that wanted to get involved. This was like years and years ago. And we used to do deposit capabilities and withdrawals. But right now we can only do withdrawals because the cost at looking at implementing the deposit capabilities was unbelievable. And these people were all on different core providers. But so right now we just have a deposit capability all throughout Vermont.
Yeah.
So I'm not sure if the callers today, I do see some familiar names from CCUA. I'm not sure if some are also from Vermont. They are, yeah, Dean's saying yes. So perhaps we can see if there's anyone that at least is on a similar platform, and then if that's the case, through the CCUA and through Vermont, approach Dolphin to see if there is an ability to have ITMs, if we only have a need for one each.
Sure. Absolutely.
From a talking point. Yeah, I like that idea. I just, on a related note, I don't know if, do you folks offer recyclers? The Dolphin?
You know, we do them in Europe.
Okay.
The main holdup on recyclers here in the United States is the networks. I mean, yeah, we have the ability to sell them. The networks are slow on acceptance, but we can
Okay.
certainly have that conversation.
Yeah, we've had a recycler for about 6 or 7 years now, and it's worked quite well. I actually was able to, we're small, we have like 4 employees, so I was able to, 2 tellers, I was able to save 1 teller position, which
Right.
is, you know, today, trying to find tellers and keep them is a great thing. So with the Glory recycler, you probably know this, Paul, but I just found this out recently, is that all the keystroking, for those that haven't used a recycler, it takes the place of a cash drawer. It's like a mini ATM that faces the teller side, right? So Glory, the manufacturer, the model that we use, they're actually putting the keys now that are going to be the new ones that have the keys facing the member or the customer if you're a bank. And that's interesting because now it's going to be more self-service, and the teller is just really there, almost like when you go to Home Depot or Lowe's, there's someone just waiting out in the wings in case you have problems.
We used to.
And
use
I think I
the
misunderstood you.
credit
I
union.
was recycling ATMs is what I was talking about as far as ATM networks. I'm sorry.
Oh, okay.
You said I was talking about ATM recyclers.
I see.
Sorry.
Yeah.
If I can use that situation.
We used
But
to use
but
those
that's the trend, at
recycles,
least,
and they were
you know.
great. Because it created an efficiency without, no one was ever over or short. It always spit out the correct amount of denominations. It was great.
Yeah, yeah. I have a 79-year-old part-time teller who was scared to death about 7 years ago when this
Yeah.
was coming, and he balances. Everyone balances real
That's
quickly.
great.
So
Yeah.
great, thank you.
Thank
More than
you.
welcome.
Well, thank you everyone for joining us today. Next week is the last week of our small credit union series with Vero Solutions, Member Close, and Tito 5G as our guest speakers. I hope you have a great week, and we will be sending out the recording of today's event later. Thank you.
Thank you, everyone. Have a great rest of your week.
Thank you. Take care.